If you're working full-time for $62,000 a year, what if I told you that just $10 a day could build you a $2 million retirement fund and pay you $17,000 a month in passive income? Here's what's coming. First, I'm going to show you why the traditional retirement path is designed to fail us. Then I'll break down the exact 2 ETF strategy that beats it. And finally, this is the part that changed everything for me. I'll reveal how to align your investments with your values while building serious wealth. Let's talk about something nobody's addressing. The average American worker earns $62,000 a year and retires with about $244,000 in their 401k. Not great, but manageable. But here's where it gets personal. Queer workers earn 90 cents for every dollar the average worker makes. Trans women, just 60 cents. Do the math over a 40-year career, and you're looking at hundreds of thousands of dollars in lost earnings. So when someone tells you to just save more, they're ignoring the fact that discrimination has already stolen your retirement before you even started. We're not starting from the same place. We never were. That's why you need a different strategy. Not harder, smarter. Before I show you the ETFs, you need to understand why keeping this simple is actually your biggest advantage. The financial industry loves complexity. They want you bouncing between stocks, timing the market, watching CNBC 24/7. But here's what the data actually shows. Nearly 80% of actively managed funds lose to a simple index fund. Warren Buffett, literally the greatest investor alive, says most people shouldn't try to beat the market. Just own it. Buy simple, diversified funds and hold them. This matters for us because we don't have time for complexity. Between managing the safety premium, dealing with higher healthcare costs, and building our chosen family safety nets. The last thing you need is a high-maintenance investment strategy. Here's your first fund, and this one's built for income. SCHD. The Schwab U.S. Dividend Equity ETF. This isn't some random pick. It's designed to pay you, and those payments grow every year. The numbers look like this. Dividend yield, 3.97%, way above market average. 10-year dividend growth rate, 11.3% per year. Expense ratio, 0.06%. Almost nothing. What's inside? Companies like Coca-Cola, Verizon, Lockheed Martin, stable, profitable companies that pay dividends whether the market's up or down. But here's where it gets exciting. If you invest $10 a day into SCHD and reinvest every dividend, year 10, $65,000. Year 20, $320,000. Year 30, $1.79 million. And that $1.79 million, it's paying you $17,000 per month, every month, whether you work or not. That's not maybe someday money. That's I can live on my terms money. Now, here's where we build serious wealth. The Invesco QQQ ETF. This fund tracks the NASDAQ 100. Giving you the 100 largest non-financial companies on the exchange. Think Microsoft, Apple, Nvidia, Amazon, Meta. The performance, past year, plus 15.47%. Past 5 years, plus 122%. Past 10 years, plus 381%. This is the fund that turns $10 a day into $2.36 million over 30 years. Yes, the dividend yield is lower at 0.58%, but that's because these companies reinvest profits into growth, and that growth compounds into life-changing money. By year 30, you'd have a total portfolio of $2.36 million. From capital appreciation, $2.23 million. Monthly dividends, $150. QQQ isn't about income now. It's about wealth later. It's about options. It's about never having to choose between safety and financial security. And now, the part most financial advisors skip, making sure your money doesn't work against you. Every dollar you invest is a vote. You can own these ETFs and still make sure your portfolio supports companies that support us. Here's how. Use ESG filters. Look for funds like ESGV. That's the Vanguard ESG US Stock ETF. Or check the Morningstar LGBTQ Leaders Index. These are 100 companies with strong inclusive policies. Check the HRC Corporate Equality Index. Before you invest, see which companies score 100 for workplace equality. Consider platforms like Gay Goals. They've invested $900 million in companies committed to diversity. Your retirement fund shouldn't be funding our oppression. With the right approach, it can fund our liberation instead. So here's your complete plan. Option 1, split the $10. 5 a day into SCHD for income and 5 a day into QQQ for growth. Option 2, phase it. Start with SCHD to build your income base, then add QQQ once you've got emergency savings covered. Either way, you're building two things simultaneously: monthly income that replaces your salary and a portfolio that gives you total freedom. And here's what most people miss about this strategy: it's not just about the money. When you're queer, financial independence means something different. It means you can leave an unsafe job. It means you can move to a safer state without panic. It means your chosen family never has to worry about you becoming a burden. That's why the next video you need to watch breaks down how to actually open these accounts, set up automatic investments, and make sure you're maximizing every tax advantage available to you. I walk through the entire process step by step, including the one mistake that could cost you thousands in taxes.